When a major UK real estate investment trust company acquisition, mouthful, hits the headlines, most people focus on the detail of the deal itself. Who bought it? How much did they pay? Was the offer accepted? All those sorts of things. But as business and wealth strategists, I'm looking at things from a different angle. What does the UK REIT deal tell us about the property market? Welcome. My name's Karen Newton. I'm a business and wealth strategist. And for my overseas listeners, bonjour, hola, ni hao. Today, I want to talk a little bit about the UK real estate investment trust market. It's called a REIT. Okay, and I'm going to talk about this particular deal that's taken place with Prologis and SEGRO and what implication that actually has for the REIT market as a whole. So let's talk a little bit before we go into this deal about what a REIT actually is. So in the UK, we have this real estate investment trust. They're known as REITs. And they allow investors to gain exposure to property without actually owning the property. They own the shares in the company rather than buying the property directly. Now, under the infrastructure for REITs, the company distribute at least 90% of their profits and from their tax-exempt property rental business. They put it out to shareholders. So this means that as a dividend investor, what happens in the REIT market is of particular interest to us, especially when we've got a big UK REIT company being bought out by an overseas company. So what we know about this, okay, Prologis, however you pronounce it, and SEGRO. SEGRO is one of Europe's largest owners and developers of warehouses and industrial property. And they own approximately 10.9 million square meters of space across Europe. Now, Prologis is a US-based global logistic company whose customers include companies such as Amazon, FedEx, UPS. Now, both businesses have been developing their exposure to data centers. And this becomes an increasingly important area as an investment, especially as artificial intelligence infrastructure continues to grow. And these data centers are needed as storage. So seeing these two companies actually come together, well, it makes sense. Okay, strategically, it does make sense. But what caught my eye, particularly with this, is SEGRO has previously rejected several approaches from Prologis. And eventually, a deal was agreed that values Prologis higher than it was currently trading. And Prologis have paid 42% above the company's share price. And that is a big amount. So why was an international company prepared to value this business so much higher than the stock market's been valuing it? Well, there's many things, and I'm not going to go into all of those today about how the companies are valued the due diligence they do, when they work out the strategic fit, the economic scale, the assets, future growth, all of that sort of thing gets taken into consideration. But it means that an overseas company who was willing to pay a 42% premium on a UK REIT company saw that business as offering huge potential to them and as being undervalued. Now, what this, as a strategist, makes me think about is the UK REIT market undervalued? Was it just SEGRO that's undervalued, or are there other companies out there as well? Now, the SEGRO deal is not happening in isolation. The UK's been experiencing high levels of merger and acquisition activity with international companies and investment groups, and they're all continuing to show interest in British business. Now, that doesn't mean that every business listed on the share market is cheap. No, excuse me, nor does it mean investors should rush out and start buying British shares simply because overseas buyers are active. It does, though, give us a signal. If a large corporate buyer is carrying out extensive due diligence and committing billions to the acquisition, and we're talking billions, when overseas companies repeatedly identify the value within the market, investors can use that activity as one more piece of information when doing their own research about investing in a company. And this is why I go behind the financial news headlines and I interpret markets. Instead of looking at what happened, what we start to look at, why did it happen and what it might tell us. One of the principles I use when investing is price and value. A share price falling doesn't necessarily mean the underlying value in that company has become a bad investment. Equally, something being cheap doesn't automatically mean it's a bargain and you go out and buy a lot more shares. What we need to understand is why the price has fallen. For dividend investors, falling prices in a fundamentally sound company can potentially create an opportunity to acquire, say, more shares for the same capital that they would normally invest. And you'll hear me talk a lot about price cost averaging. And I am a strong component. Price cost averaging to me is one of the best strategies that you can use for buying shares on a regular basis. But if the shares fall and its value and the fundamentals of the company are a problem, then we don't want to be going out and buying lots more shares. So the skill is actually recognizing, is this a normal movement within the company and within what is happening in the markets today? Or is this something that is peculiar to that particular company? And there's some of the things that we look at and think about when we're investing. Now, one of the things you frequently hear me talk about is the ripple effect. And this is where this merger story becomes more useful. It's simply knowing that one company is buying another. So what I'm doing is I'm watching overseas buyers and what their particular behavior is like. And are there other signals about professional and institutional capital and where they see value? Prologis agreeing to pay a substantial premium for SEGRO doesn't tell us what the UK stock market will do this week, tomorrow, a month from now, nor does it tell us the state of the UK REIT market, but it does give us something to investigate. If international buyers are continuing to pay significant premiums, then previous market valuations may not be the true value of that company. So what we look at is which sectors are attracting buyers, are particular types of assets being targeted, are international companies buying businesses for their current earnings, their physical assets, their intellectual property, or for future growth potential? And are there similar listed companies that investors are currently overlooking? And this is where interpretation becomes valuable. We're not trying to predict tomorrow's share price, not looking for the signals that tell us where to do the research. What we're looking at is this ripple effect and how it's going to affect the market and other companies. So let's look at business and wealth strategy in practice. I call myself a business and wealth strategist. Okay, most people say, well, what on earth is that? And what I do is I look at stories, but get in behind the headlines. Markets are constantly providing us with clues. They give us clues about where the market is moving, where confidence is strengthening or weakening even, and where sophisticated investors believe future value may exist. It's about learning to read those signals, learning to interpret what might happen and decide whether it's worth looking or doing further investigation. You don't need to be able to predict the future. You need to be a person who can ask better questions and then do the research to find the answers. The headlines tell us what happened. It's already happened. Interpretation helps us decide what matters. So when we look at this Prologis SEGRO story, is there something unique about SEGRO that they were actually worth paying for? Or is it a market that is undervalued and there's potential opportunity there to invest, earn dividends, and make more money? I'm not here to tell you anything specific. I only talk about educational and help you to understand things so you can do your own research. But it is something that you can investigate. And you know your risk level and whether that would suit you. We have seen the real estate investment trust market in the doldrums. What is Prologis finding, liking about SEGRO that it's willing to pay a 42% premium to acquire it?
Disclaimer. The information shared in this podcast is for educational and informational purposes only. It is not intended as financial, investment, legal, or tax advice and should not be construed as such. I am not a licensed financial advisor, and the strategies discussed are based on personal experience and general market knowledge. Always do your own research and consider your individual financial goals, risk tolerance, and personal circumstances before making any investment decisions. I strongly recommend that you consult with a qualified financial advisor or licensed professional before acting on any information discussed in this podcast. Investing involves risk, and past performance is not indicative of future results. By listening to this podcast, you agree that the host and associated entities are not responsible for any losses or damages arising from the use of this content.